Almost forgot to flash up the disclaimer. Happy Sunday, everyone. Hope you guys are doing fantastic. Get audio. All right, there we go. Audio check is good. Happy Sunday to everybody. Hope you guys are doing fantastic. Tarek, hello, sir. Your New York AM session video really helped me. I request you also to make an afternoon session for us. Thank you. God bless all the way from Kenya. Shout out to Kenya. Tarek. Absolutely. That's something I'm looking forward to sharing with you guys. Some PM session trading protocols. It is very simple. What I look for in the PM session in terms of using lunch liquidity and then how you can frame setups using that. And that would be a model that could give you opportunities just about every day in the PM session. So absolutely, be more than happy to share that. Really good suggestion, Tarek. Williams, afternoon, Dylan. Glad to be in the Discord. Keen to learn. Yeah, Williams, happy to have you, brother. Glad to have you in the Discord, my man. Joe, hello, Dylan. Happy Sunday. If you have a question, if you can have a question in the community, answer. If you can't answer, absolutely. Yeah, I'll go ahead and answer your question here. If you'll be around with us till the Q&A, more than happy to cover that for you. If not, I can go ahead and just drop a usual video answer like I do for you guys in the mentorship. For sure, Joe. I got you covered, brother. No worries. Raj, my man. Wonderful Sunday to you, Mentor Dylan, and everyone joining. Happy Sunday to you as well, sir. Amy, hello, hello. Hi, Dylan. Garterberry's Bonnie. Yeah, glad to have you, Bonnie. Thanks for joining. Kevin, happy Sunday. Happy Sunday to you, sir. Eslam, hello, hello, sir. All right, guys. So let's go and get into it. Today, let me see. Man, the screen is giving me problems again. It's frozen. All right, I'm going to go ahead and reset this here. Hopefully, it's not going to be giving me problems all day. Let me see what I should do here. All righty, we should be back now. Let's see. All right, guys, we're good to go. Apologize for that. OBS giving me issues, man. This thing's always causing problems. I'll leave it at that. All right, guys, let's go and get into it here. Hopefully, there's no more interruptions here on my end. Apologize for that. All right, guys, so we'll go and get right into it. It is the summer months. Do keep in mind for the economic calendar, we do have a pretty loaded deal here this week with CPI and PPI. One thing to keep in mind, if you guys noticed, the indices didn't move around a whole lot last week, and that's why the economic calendar is so important. If you've seen some of my recent videos, I've done some teachings on how we use the economic calendar, and while I'm on the topic, I'll just go ahead and pull it up here. If you look at the hourly chart for indices last week, tradable for sure, but range bound, right? So if we see this as a new week opening gap, this is where we opened, and the market referred to it the entire week, which is the indication of a consolidation profile, which Tommy was sharing throughout the week. So why would the market consolidate? If you look at the economic calendar, there was very little to no high impact news last week. High impact news, the news is going to be the catalyst for the market to move. Is essentially what it is that I'm trying to say. So when there is not a presence of high impact news, you can expect this type of delivery here. And then when you especially couple that with the summer months, it's a loaded deal for it to be a low probability consolidation trading week. Tradable, absolutely, especially if you're a scalper. But if you're looking for sustained price runs for big moves, it's going to be a lot more difficult to do in a consolidation profile. I am not expecting that to be the case this week, which is the whole reason I'm bringing this up, because we do have CPI and PPI this week, and then a couple other high impact news drivers. So I suspect that this week will be much better in terms of price delivery. And then with what we understand, after small range candles, we get large range candles. So last week, small range candle, looking for a large range candle this week, which would also be in line with the economic calendar. So just a little bit of insight there on how you guys can utilize that information. All right, guys, so getting right into it here, let's drop down into the monthly here for US dollar. So we dropped down into this bullish order block that we're watching here. I wanted to see how we traded there. Does the market keep giving black down close candles through it, closing below 50%, showing weakness? Or do we hit it, stay in the upper half, use it as support? That's what I wanted to see, right? The market's already dropped a lot. We've already called a huge move to the downside. So now I want to see, is this thing starting to run out of steam and pick up to the upside? Or are we just going to keep selling off and sinking lower? The market would tell us it's going to keep selling off by showing weakness signatures through these levels. That's why these PD arrays are so important, because you can read the order flow as to how the market's trading at those levels, and you can get a feel for if it's bullish or bearish. So we dropped down into the down close candle here. So far, we're seeing it stay in the upper half, which is not bearish in the short term. So watching that key level right here. We're also in a optimal trade entry of the entire range that we're trading in on a monthly chart. If you look from low to high, Oh, and while I have the fib extensions, I'll share some things on that with you guys here. So if you look at the optimal trade entry here, 62 to 79% retracement, we're also in an optimal trade entry. So we're in a deep discount here on dollar, sell side taken into a bullish order block, and I want to see how we trade here going forward. Dropping down into the weekly, the market is still bearish, so I'm not trying to call a bottom in this market. When the bottom's in, it's in, and we'll use that information when we get to that point. But as of right now, I don't suspect that we've seen a bottom priced in, and I'm not trying to call it. What I am watching is the weekly chart here. Actually, zooming out before I zoom in here. If you guys remember, we had this order block as a downside target here. So this big beefy down close candle. Extend that through here. So extending that through. We had that as a downside target. We wanted to see the market draw into it. And then I more specifically said we wanted to see how the market trades at that level, right? Because remember the bearish scenario I gave you guys last week? The market would be really bearish if it broke down and closed below 50% and then made an attempt to get down through the low end of it. That would be a very heavy market with institutional order flow being heavily bearish. However, when you see the market drop down into it, be unable to even reach mean threshold or 50% of the order block, and it stays in the upper half, that's signaling potential bullishness. So that's what I'm watching with these levels. I'm watching the order flow and how the market trades inside these key PD arrays. So it did not keep accelerating lower to make a run for the sell side here. It stayed in the upper half. Now dropping down into the, well, actually we'll go zoom in here now. So now that the market's showing a bounce from that weekly bullish order block, we're going to take that off here. We see the market trading back up into the range into this up close candle here. And what I'm watching is this wick. I split that in half, and that was the target I had on the upside last week as long as dollar kept pressing higher. So we saw the wick 50% traded up into. I want to see, can the market respect that? Because what you'll notice when institutional order flow is bearish, up close candles are respected, right? Check this out. Up close candle, hits it, slams lower. Up close candle, hits it, slams lower. Up close candle, hits it, slams lower. Up close candle, trades into it, trades lower. Up close candle here, market trades up into it, sells off. So that is the definition of bearish order flow, or institutional sponsorship being bearish when up close candles are being respected to the downside. So I'm watching essentially for the same scenario here. We're trading up into the up close candle. Do we trade up into it and sell off, or do we overtake it? If we overtake it, then that will give me indications that we're likely going to see a bottom, and then I will be able to work with that information if and when we get there. So what I'm saying is all eyes are on this up close candle and how we trade here. That's going to give you a great deal of insight going forward as to what we should be looking for in a longer term horizon. All right, working down into the daily here. So we created a nice swing low last week, rounding out a low of the dealing range here. So if we look at this range high, range low, equilibrium's about here. So they took it up into a premium market and also up into this bearish breaker block in here. So $4, go ahead and watch that going forward. This breaker here that I have in red is going to be a key level because we traded into a premium of the range and also into this bearish breaker block in here. So I want to see how we trade there. If we're going to be bearish, the market should hit premium valuation and then continue rotating to the downside. That's a signature we want to see when the market is bearish. However, if we start to see strength through this breaker here, then I will look at the market to reverse its role, and instead of a bearish breaker to send it lower, I'd want to see the market get above it, use it as support, and rally higher. So all eyes are on this breaker for me. I would be reluctant to open up new short positions from a swing trading perspective because we've already seen a huge move lower and we're in a deep discount. That is not a good idea to take shorts in a deep discount, in my opinion, because we've already traded below the lows. We've already seen an extended run to the downside. So this would not be high probability shorts for me. Not to say the market can't keep going lower, but in terms of a trading standpoint, from a swing trading perspective, going short after the market's already cratered is, in my opinion, chasing price. So in terms of opening new short positions here, I would advise against. Not that I'm a financial advisor, but I would not advise going short after the market's already dropped so much. And then the other thing that I wanted to point out that my man Tommy was telling me, in case you don't know who he is, he's the macro expert on my team, and the commercials have been steadily buying dollars that's been dropping. So the commitment to traders report is not a timing tool by any means. It's not going to give you the timing of the reversals. However, if you look at it from a market maker standpoint, the market is already in a deep discount. And if the commercials are buying heavily, we could potentially see the market turning at some point. So watching for some indications of that here in the future. All right, then dropping down into the hourly chart. So we're watching how price trades inside the breaker, and that's going to be this huge red rectangle here. If we start to see some strength up through that, then my attention goes to that purple rectangle, which is a volume imbalance here. So that's a little inefficiency in there. And if we start to see speed through that, that would be my next target. So giving you guys both scenarios that I'd look for here in dollar, not calling both sides, but just what are the scenarios I'm looking at and what are the key levels I'm going to use to base the decisions that I'm looking for off of. And again, the reason the dollar is so important is because we see dollar's been selling off. So that's going to allow indices to do what? Rally in a risk on scenario, right? Risk on meaning investors are willing to take on risk because dollar's selling off. So money capital is leaving the dollar and going into risk assets, foreign currency, stocks, all the above. All right, moving right along into bonds. Not too much to say on bonds. Again, bonds are still in this nasty monthly consolidation. We are still respecting the weekly bearish market structure that we've been looking for. So we haven't taken out any key highs, but the market's consolidating. Not interested in calling markets that are showing that signature. It's just not easy to work with. So not a whole lot here on bonds. They're still in a consolidation. So not much to share there. However, the market structure is still bearish in my opinion. If we zoom out and look long-term on bonds, bonds are still heavily bearish. There's nothing bullish about bonds. But if we look, this is a 3-month chart. We've been in consolidation for a long time. So I'm not really interested in touching a market like this. It's just really difficult to call. If I traded in markets like this frequently, it would look like amateur hour. So again, essentially it's knowing what conditions you perform the best in and what conditions you don't perform the best in. And if the markets are trading like this, it's sloppy. There's not clean market structure. There's not clean order flow to really read into. And it's just a lot of sideways action. And it's very difficult to be precise in market conditions that are showing these types of characteristics. So that's why I'm not very interested in the bond market. All right, moving right along, we'll go over to NASDAQ here. All right, so monthly chart. We just opened up a new month here. So it looks like open low and then looking for expansion here the rest of the month to the upside. Working down into our weekly chart here. We had a very small range week last week. We basically closed where we opened. And that's why the new week opening gap is so important. Because if you are extending the new week opening gap forward throughout the week and the market can't get away from it, that's telling you it's a consolidation profile. So let me show you what that looks like here. It's something you guys could keep in your back pocket for future reference. So when you see the new week opening gap and the market is unable to trade away from it, that's one of the surest signs that you're in a consolidation. So see how there is no meaningful move away from new week opening gap? Drop below it, pull back into the range. Drop below it, pull back into the range. Get above it, pull back into the range. Get below it, pull back into the range. That's the surest sign you're in a consolidation profile. And what that can give you insight to is that it's a scalper's market. It's not likely to go anywhere. But when you think of this concept of the new week opening gap not being expanded away from, what does that look like on the weekly chart? The market's staying near that opening price. So that's how you can predict a doji candle, is when you understand that the market's not leaving the opening price. It's not expanding away. It's just referring to fair value. And the new week opening gap, the opening price, is a measure of fair value. And even when the markets are consolidating, because the markets are scripted and rigged, there's no such thing as the market doing nothing. It's referring to fair value. So when the market's consolidating, it's not actively expanding. It's referring to fair value like the new week opening gap, because it's not leaving that range because the markets are controlled, they're scripted, they're rigged. So even if it's consolidating, it's not like the algorithm's taking a day off. It's referring to the very specific reference points that it's coded to refer to, such as the new week opening gap. So that's why when the market is constantly referring to the new week opening gap and not moving away from it, that's the surest indication that you're in a consolidation profile. So with that in mind now, going into the weekly chart, I am expecting a rather large range week the following week because we've already seen such a small range week the previous week. And considering the economic calendar, we have a loaded deal. So I'm suggesting that we're likely going to see some pretty good fireworks in NASDAQ and S&P this week. What I'm watching on the downside is this weekly fair value gap. The market can trade down into it. It would be ideal if it doesn't, because if they leave that open, very similar to this gap here, right? When they leave gaps open, that's really bullish, right? So if they can leave this inefficiency open, that would be ideal, but it can drop down into it. I wouldn't want to see the market take out this down close candle. So as long as we're above the fair value gap and this down close here, I'm long-term bullish on equities. Need to get my computer charger. Let me see how much charge I have. 8%. Let's see if we can make it. All right, daily chart here. Let's start with long-term targets, and we'll zoom in here to the nitty-gritty here. All right, so again, we're not trying to call a top in the equities market. one of the sayings I have is when the top's in, it's going to be in, right? So when they do price in a high and then they're ready to send it lower, we'll be able to address that when we get there. So as of right now, I like the 817, just call it the 800, big figure number. So 23,800, I like that as an upside draw, as long as order flow and market structure remains bullish. So as long as the institutional market structure and order flow continue painting bullish, there's nothing to look for lower prices in. And that's why it's so important to be able to read market structure and institutional order flow so that you can know whether you trust the bias or whether you should start potentially looking to reverse or look for the opposite side of what you were expecting. So 23,800 is the next level I like on the upside. And yeah, I'll just leave it with that for now. That's a good enough target. Let me see. About 1,000 points of range. Yeah, I'll give you guys some other targets as well. Yeah, so I like that 23,800 level. And then above that, we could look for 24, just call it 300, 24,300 on the upside. So those are targets I like on the upside as long as order flow remains bullish, which I don't suspect anything is changing. So now to zoom into the recent price action here. Market structure, order flow still bullish. I know we stalled a little bit last week, but we're still seeing institutional order flow remain bullish. Down close candle, still supporting price. And what I was sharing with the Discord this week, I think I just shared this with the, had a lot going on this week, by the way. So if you're not in like the mentorship, you probably weren't up to date, but I had a lot going on with personal matters and stuff like that. So I wasn't able to be too active, but I was able to share a little bit with the mentorship group. And what we were watching was this down close candle here, right? And as long as we stay above that, we're looking for higher prices, more specifically the 50%. So if we stay above 50% of this candle on a closing basis, right? The wicks can trade down into it and even go below it. But as long as the bodies stay above it, we're bullish, looking for higher prices. And we're still seeing down close candle support, down close candle support. And as long as that remains true, we're still bullish, looking for higher prices, even though it's really a slow grind higher. So as long as we're above this candle, we're looking for higher prices. It already did the work of dropping into this fair value gap here. Order block should send the market higher. And working down into the hourly chart. So we built in a bit of a consolidation range here. What I'm interested to see on the hourly chart for us to leave this range and it not be a scalper's market, I want to see the market either break the high or the low. Not that I'm trading the breakout, but if we're bullish, I'd like to see the market drop, accumulate sell side, and then trade higher. It'd be better if they don't take out this low here because that's a key low in my analysis. It's an intermediate term low. So I'd ideally not want to see this significant low taken out on the 4-hour chart. But the market can, because we're in a consolidation, sweep down below these, accumulate these sell stops here, and then send it higher is what I'd be looking for on NASDAQ. And then for S&P, same deal for S&P. So you guys can just use the same levels that I have on ES as well as Dow. I know I'm going to get asked for Dow, so let me go into that. So yeah, Dow is going to be the same deal. Small fair value gap there. It can trade into it, but it's ideal if it leaves some of it open. And then my upside target's already shared for Dow, which would be the rejection block here, the highest body. And then these highs up here at the 45,900 level. All right, guys, that's everything I had here today. I believe. Yeah, go ahead and touch on crude oil. All right, so crude oil, last week I took your attention to this gap here. It's actually still there from our analysis. We dropped down into it. We talked about how the bodies were staying in the upper half. That's exactly what we want to see. I haven't abandoned bullishness on crude oil. It's just very volatile because everything that's going on worldwide. It's World War III. Oh, now it's peace. Oh, now it's starting again. And it's just so much volatility going on right now. And I think a lot of investors are eyeing what's going on in Taiwan and China. Now, a lot of threats are being made, military moves, so saber rattling, a lot of things going on right now on that side. So if anything escalates in any of those regards, that will send crude oil to the moon. So what I'm watching right now, crude oil, we have this imbalance right here. We're staying in the upper half. That's bullish short term. And then we have buy side here. So for the market to look to gravitate up into that, as long as we stay above this gap here. So as long as we stay above that gap, that would be bullish. And I would look for higher prices off the back of that. And then daily chart, same deal. So yeah, look for higher prices as long as we stay above that key weekly gap that we're watching. So that's the business on crude. Gold, let's see what we got here for gold. All right, so we were watching this down close candle last week on gold. Market stayed supported there. That was good. Why this down close candle in particular? That's a key level of my analysis because I'm looking at that as a bullish order block. Why would that be a bullish order block? Because we have a discount here, dealing range, equilibrium. This candle dropped down into equilibrium and took out sell stops. So that's a turtle soup here. Long, down close candle. That's a bullish order block. Crossing that opening price, that's the change in state of delivery to create a new buy program. So I like the buy side here as a draw, as long as you remain above this down close candle here. So that's bullish for gold in the short term. And then for silver, man, hopefully you guys are making some money off this silver analysis. I know a couple of you guys like this market. So we'll take it up from the weekly chart here. So these are all my annotations from last week. I didn't even have this on. This is the same things we were talking about last week. So we covered this gap here being a breakaway gap, wanting to see it left open. And this be a bullish breaker. So you see we drop down into it, bullish breaker, support, gap left open exactly as the doctor ordered, and the market is absolutely ripping higher. Dropping down into the daily time frame, you can see the market dropping down, clearing sell side, but leaving the lower half of that weekly gap open. That's exactly what we wanted to see because there's a breaker block here. So when there's a breaker block, that's you can expect a breakaway gap because it's a balanced price range. So because the market's already traded higher, lower, higher, this is already efficiently delivered here. So it doesn't need to come back down into that range. It can just dip down into it, give institutional order flow entry drill, which is just a partial entry into a fair value gap, and then the market's going to blast off from there. So silver, absolutely ripping on the back of everything we've been looking at here. So metals, extremely bullish on metals. I've been talking to you guys about metals for a while now. Not as a trading tool, as an asset. I don't really like it as an asset to trade, but for investing, if you have money to put to work, definitely suggest precious metals. Definitely better than inflation slaughtering it in the bank. So with that in mind, I believe those are the usual suspects. We covered them here. Any other questions from me here before we get going, guys? Don't want to keep this one too long. Amy, if you haven't covered it yet, outlook for gold, silver, oil, covered that. Only thing we're missing is Bitcoin. Yeah, let's take a look at Bitcoin here. Yeah, so Bitcoin is heavily bullish as well. Fair value gap. Support here, left this one open down here. And basically the same thing we just saw in silver, right? Bullish breaker, low, lower, low. This is a breaker here. Breaker with the fair value gap. Market's absolutely tearing. So Bitcoin is strong here in the short term. So bullish breaker here we were watching because this is a low, lower, low. Found support inside this bullish breaker here. And this thing is just tearing higher. So looking for higher prices on Bitcoin. And then in terms of targets, all right, computer's starting to get glitchy. 1 second, let me be right back. All right, so we covered gold, oil, back to where's that? If you could touch on euro, that'd be great. Dollar analysis super helpful. A little Asian example would be appreciated. Yeah, absolutely. Would love to. All right, so let's see. Is it working? All right, guys, we're back, man. Technical difficulties out the ass today. I do apologize for that. All right, everything should be working good now. Computer was a little laggy because the computer charger issue, because I was out of the office, so I didn't have my charger handy. Okay, so where did I leave off with? I talked about gold, silver, Bitcoin. That should have went through good. So covered that. Awesome. So next thing to touch on is euro dollar. Yeah, absolutely. Yeah, I'm more than happy to touch on euro dollar. All right. So one of the things with currencies, before even going into the actual currency you're going to be trading, whether it's euro, pound, Aussie dollar, yen, it doesn't matter. You always want to look at dollar first. So we already covered what we're looking for in dollar. So now with that in mind, we can go into the euro and look for the opposite, right? So if we are bearish dollar, then we would be bullish euro. So what I'm watching for euro will be this fair value gap that we're trading in here. So let me see, did dollar create a fair value gap? Yeah, okay. Been a little while since I looked at forex. I want to take a look at them here together. Okay. So for euro, what I'd be watching here is the weekly fair value gap in here. It's gonna be a key level. What you'll see is we drop down. We hit the midpoint here, I believe. So let's see, lows. Yeah, so it fell just short of the midpoint there, but that's what we'll be watching going forward for euro. So I'd recommend to watch this weekly fair value gap here. Ideally, we'll see the market stay in the upper half. It can trade down into a little deeper, but if we're going to be really bullish, and we'd want to see the market find support inside that gap. Working down into the daily chart here. Very similar to dollar. It's dropped, but it has not dropped into equilibrium of the range. So watch this daily fair value gap here. But all eyes are going to be on dollar. If dollar sells off from the premium of that range we were watching, then that will be bullish for euro, and we'll see it take off. And then when we're looking at euro and pound, the best shorts are going to form in pound because it's heavier, it's weaker. And then the best longs are going to form in the euro. And then when you're trading currencies, you want to look at the cross pair. So if you're monitoring like euro and pound, for example, you want to watch the euro pound. So euro pound is what? It's bullish. Euro's first in the name. So that means euro is stronger and pound is weaker. So if you're going to be trading currencies, you also want to know which one's going to be the leadership issue. And in this case, it will be euro because the euro pound is stronger. So you always want to look at the exotic cross pairs when you are looking at euro and pound. It'll tell you which one you'd rather short or which one you'd rather go long based off of relative strength analysis. So little further insight there for you, Bonnie, on the currencies. And then, yeah, as long as we remain above that fair value gap, that would be bullish. Pound, I wouldn't be interested in going long pound. Pound's showing more weakness signatures. We have this order block down close candle trading all the way down through and right at about the 50%. So I don't like that as much for bullishness on pound. So if I am going long, I would favor euro if I was trading currency this week. All good now. Thank you very much. So hopefully that answers your question. If you have any follow-ups with that, Bonnie, you can let me know here or on the Discord, and I'll be more than happy to get back to you. Great question. Silver 100% on point, Dylan. Thank you, Joe. Very, very much appreciated. I'm a big bull on precious metals, and the reason being is it's a very simple equation, right? If they keep inflating the currency, if the currency keeps getting devalued, prices of things go up, right? It's very simple, right? Real estate going up, price of vehicles going up, gold, Bitcoin, stocks, everything goes up when the currency gets inflated. So it's one of the ultimate inflation hedges to buy gold and silver. So I'm a big bull on those assets, not because I think they're going to do anything, but because I think the currency is getting so devalued, everything priced in dollars is going much higher. You know, before gold used to be like 41, 50 bucks an ounce. And now we're at what, 3,000 and some change. So inflation is very real. It's going to keep going much higher. I think they just opened up 5 trillion more of spending. So what that means is they're going to print more money, and it's going to steal purchasing power from the dollars that you own, and that's how inflation works. So inflation is going to get much worse, which is why it's very important to have your shit together with trading, because trading is an inflation hedge. You can outpace inflation with the skill set of trading, which is why, in my opinion, now it's more important than ever to learn how to do this shit the right way, because I think things are about to get very difficult. Financially, with inflation, things getting expensive. They already are, right? I know everyone goes to the grocery store and it's sticker shock, and that's probably going to continue. So never been a better time to acquire a skill set than now. So I'm going to leave you guys off with that. Don't see any further questions here. was great hanging out with you guys today. I apologize for the technical issue. Should get that resolved here before the next one. And last thing is I have a YouTube video that will be out either tomorrow or the day after that. I don't have a real rush on it. And that's going to share the Notion template cutting out a bit. Yeah, thanks for letting me know, Kevin. I'm not sure what's going on here today. Let me see what's going on. Okay, should be good now. So I'm going to go ahead and close out here. Last thing though, I will be making a YouTube video breaking down my full Notion template and my weekly routine. So I'm going to cover both of those things in that video. My entire weekly routine from Sunday to Saturday, everything I'm doing every week as a full-time trader. And then in addition to that, I'll also be sharing my Notion template as to how I track everything as it relates to my trading, from backtesting logs to journal entries to trade screenshots, how I organize all that in one central hub. And I'm going to share that with you guys in the Notion video, and that should be out in the next couple of days. So that's going to be on the agenda. Keep a lookout for that. I'll have an announcement out about 24 hours before, and that will be insightful as usual. Any other feedback on videos, things you guys would like to see on the YouTube, let me know. I'll be more than happy to create more videos for you guys, and that's definitely something I'm going to be doing more of as we go ahead and get more on YouTube. But right now I got to wrap up what I'm doing with Medship, get those next few months of content out, and then we'll really be hitting the YouTube hard. But right now I'll be looking to do about a video a week for you guys. So your guys' suggestions and ideas for content are very helpful for me when I'm sitting down and organizing what it is I want to do. And if I start seeing a couple of you guys say the same things, then I'll know that's a important matter for me to touch on. So I'll be more than happy to share that with you guys. Any suggestions you guys have, do be sure to let me know. Eslam, thanks for today, Dylan. Take care. Yeah, my pleasure, brother. You as well. A good time to plant a garden, people? No doubt. No doubt. Absolutely. Joe, thanks, Dylan. Yeah, my absolute pleasure, brother. Absolute pleasure. Garden, non-perishable foods, things just to sustain you just in case things get a little hectic. So with that in mind, guys, have a very safe rest of your weekend. I will see you guys in the next YouTube video. And like I said, please do give me suggestions. I take them in and I will make those videos accordingly. Take care. Have a good rest of your Sunday, guys. And I will see you guys on the next one. Have a fantastic rest of your day, guys.